Thank you for joining us today. We're really excited to hear more about your company's role in the mining industry and your current initiatives. So why don't we begin with the introduction of yourself, your role, and your company?
Thanks, Brian. My name is Kevin Flynn. I'm the Chief Financial Officer of Ecora Resources PLC, a London and TSX listed royalty and streaming business. I've been with the company now for 12 and a half years, working through various strategic objectives in that time as well to be in a place where we are now.
Wonderful. So in the current landscape of the natural resource sector, how do you see royalty and streaming agreements shaping the future of project financing?
Yeah, I think that's a very good question. I think in the current market, the conventional sources of capital are very difficult to obtain certainly for junior and small cap mining organizations. I think that's really where the royalty and streaming source of capital is very important. When I started, which is now 12 and a half years ago, as CFO of Ecora, I think there was a negative perception of what a royalty and a stream product was, in terms of it being very much perceived to be mezz finance, which has always had connotations of being very expensive. I think what we've seen now in the last number of years is very much a general acceptance of the product as part of the capital structure of most small to mid-cap mining businesses. And I think the various benefits of what a royalty and stream provides, has really come to light in terms of how to help advance mining projects forward. You know, when you look at certain small and mid-cap stocks, they're trading at very distressed levels. Any form of financing, certainly at equity level, can be very, very expensive, very dilutive. The royalty and streaming product sits very well between debt and equity, and I think provides very much a partnership in terms of how we like to see some of these projects advance. So I think you will continue to see many more royalty and streaming transactions get undertaken in the natural resources sector. The model is very well understood in North America and Australia, where most of our peers are domiciled. So, I think Ecora is uniquely placed to kind of be that visible presence in the European market.
Right, absolutely. And for those who are unfamiliar, what do you believe are the key benefits for investors who want to or are interested in engaging in royalty and streaming companies within this sector and industry?
Yeah, I think for investors, the real selling point of the royalty and streaming business is that it provides investors with exposure to commodities, but that exposure is at the top line. It's directly at the revenue line. So at its simplest, a royalty is Ecora would provide an amount of finance. In return, it would expect to receive a percentage of the revenue that the operator generates. So what you don't have with royalty and streaming companies is a significant focus on operating pressures, operating margin pressure, which has been obviously daylighted significantly in the current inflationary environment. You don't have future participation or CapEx call requirements into budget overruns or delays. Once a royalty is invested, it remains at that level and participates in the upside, whether that's through commodity price increases or through resource and reserve increases and uplifts as well. So for investors who want exposure to natural resources or commodities without having to directly diligence the mining operations itself, royalty and streaming businesses are very attractive in that respect. And secondly, and also as importantly, royalty and streaming businesses tend to have a portfolio of assets. So there's natural diversification already within the product offering. So for Ecora, for instance, we've got a portfolio both in terms of producing assets, so directly generating revenue, meaningful growth assets as well. But that exposure is offered to investors across a breadth of commodities, jurisdictions, and counterparties. So that natural level of diversification provided at top line, we think is a very compelling way to obtain your exposure to the sector without having to worry about asset level diligence.
And how would you ensure that your royalty and streaming agreements remain flexible and attractive within a fluctuating market?
Yeah, I mean, I think, to answer that question really is to understand what the key benefits, I suppose, of the royalty and streaming offering is to partners. I think every royalty and stream that we have done has by and large been quite bespoke, tailored and cut to suit the needs of our counterparties. I think when you look at a royalty or stream financing versus equity, for instance, if your equity is trading at levels which fundamentally undervalue the business, which is certainly the case for most small and mid cap mining stocks at the moment, royalty financing is accretive immediately on day one. I think when you also look at the fact that when you consider a royalty versus equity, a royalty only attaches to one operation. So if you're a multi-asset organization, to issue equity is to kind of give upside across all your assets, whereas with a royalty, you're attaching that financing product just to one specific asset. Thirdly, I think one of the key pieces of flexibility is if you have an operation or an ore body which has got a byproduct associated with it, you can monetize that byproduct. You can stream the byproduct and retain your focus and your exposure to your core and key commodity. So we've seen all these transactions being done very successfully over the last number of years. I think when you then look at a royalty or a stream versus conventional debt, the product itself is not intrusive at all. There's no financial covenants associated with it. There's usually no fixed payment schedule. Basically, when an operator generates cash through selling their product, that's when the royalty becomes payable. So we share in the kind of cash flow generated without requiring cash when it's not being generated. So that's where we really see the benefits of the royalty and streaming model. And as I said earlier, this is becoming much more mainstream now in the capital structure for most mining organizations.
On a more broader lens, given the global energy transition, how is Ecora positioning itself to capitalize on the increasing demand for these critical minerals? And how are you differentiating yourself from other firms within the sector?
So in the royalty and streaming universe, the vast majority of royalty companies focus predominantly on precious metals. At Ecora, our USP is that we don't focus on precious metals. We focus on basically the rest of the mining universe. We look at primarily to energy transition materials. Within that subset, we mainly look for base metals, and our key exposure really is copper. We've got one of the best growth copper profiles of any royalty and streaming business. We also have exposure to nickel, vanadium, cobalt, rare earths recently as well. So we are really looking to provide a broad exposure to energy transition materials through the royalty and streaming model. I think fundamentally with that level of diversification as well, what should happen and what we're striving to achieve is a low beta way to invest in the sector. And I think with that comes a significant prize in terms of equity rating. And the energy transition itself, undoubtedly, there's going to be huge demand for these commodities. Royalty and streaming companies will not be able to finance that on their own. We will need support from governments. We'll need the equity markets and debt markets to get behind those projects as well. But when you think about what the precious metal royalty companies have been very successful in doing, it's to almost be an equivalent to an ETF for gold and silver. And I think at Ecora, we're really building a portfolio and a business which could perhaps be an ETF for playing the energy transition. And I think the good news is that there's plenty more to do. We see a lot of opportunities to continue adding growth and diversification to our business, which should drive a lower vol, so a higher beta stock. And that's ultimately the objective and the strategy of this business. We're very well capitalized to continue deploying capital. We've deployed about $425 million over the last 2.5 years. to finance some key strategic projects. And there's plenty more opportunities to continue that growth journey.
So, touching on a bit of what you mentioned, what do you think are some of in your view, the most significant challenges and then conversely opportunities facing this industry within the next year or five?
Yeah, I think you can't take a short-term view when you look at a cyclical sector, I suppose. Thinking about the mining industry, it's the wider mining industry. I think the key challenges still remain permitting, the engagement with local communities, local governments to get support for projects. Infrastructure is an enormous challenge in terms of how to ensure that a project can be successfully delivered. At Ecora, for non-producing assets, we very much focus on the quality of the ore body. But in order to monetize that, it needs the support of a significant number of stakeholders. I think when you look at the royalty and streaming model, the real success of how we invest, of how we kind of limit to a degree our exposure to commodity price downside, is the entry point in a cyclical commodity price environment. The good thing for Ecora is that we're not pigeonholed into just investing into gold or silver. We can move laterally across a number of commodities. So recently, if lithium was running hot, we can invest into cobalt. If nickel's running hot, we can invest in copper. So our investable universe is very significant. So I think the challenges that Ecora itself faces now is to significantly increase in size. When I joined the business, we had 3 strategic objectives that were imperative. The first was to replace the revenue from our cornerstone asset. That now has been achieved on an average through cycle basis. The second was to provide growth into the business beyond our cornerstone asset. We completed that objective with the acquisition of Santo Domingo and West Musgrave from Set 32 in the second half of 2022. And the third objective now is just to keep doing more, get bigger, increase our trading liquidities and volumes, and become much more investable to a wider audience. That's not a one-year fix. That's probably more medium term. But the real kind of advantage Ecora has is a bit of a first mover advantage. We've got a world-class portfolio of tier 1 assets, we believe, in predominantly OECD jurisdictions, and that's a very good base to continue the momentum of the journey that we've traveled on so far.
I guess I would like to finish with, in your leadership position, what are some of the key objectives you'd like to see in your firm over the next few years? And what are some of the previous accomplishments I think would speak to that?
Yeah, I think from an internal perspective, we've got an amazing team of people. Mark, our chief executive, has been with the business for over 10 years. He started on the investment side and became chief executive about 2 years ago. Doing a great job. So we've got a very stable, steady team of people who have been doing this for a very long time. And I think in a sector that's reasonably niche, like royalty and streaming, I think that's a huge advantage. What's key for us is that we have the in-house capabilities to assess the technical merits of projects and ore bodies, and really understand the mining processes that go on internally to make calculated risks sometimes when deploying our own capital. I think the track record that we have to date backs that up. We've seen assets that we've invested in come into production. We've seen certain of those assets outperform in terms of the base case production assumptions. And I think we've been pretty smart in terms of our entry points into certain commodities as well. So it's basically capitalizing on that intellectual property we have internally to continue growing this business and retaining the momentum, really. And I think we're based in London. We're trading at a discount. We offer investors currently a very deep value exposure to the natural resource sector. And, I think our ambitions for this business is much bigger. I think we see the opportunity to scale this business. And, I think ultimately offering exposure to energy transition through the top line revenue line is just a very good way for a lot of generalists or those without deep understanding of mining to get their exposure in a public market. in addition with a dividend yield of currently about 5%, that is a very low beta way to play the sector too. So I think there's certainly a very compelling investment proposition from Ecora currently.